Hello, yay, happy Wednesday. I am so glad y'all are here. Today we are going to be talking metrics. I also use the words KPIs, which are key performance indicators. I'll be using them interchangeably, but I think most people think of metrics. So for all intents and purposes, we'll be talking metrics today. If you're here, please say hello. I'm going to get my notes pulled up because I have a lot to say on this subject. And we can get as detailed as we want. I don't want to talk a lot of accounting jargon that is just over your head. So let me know if you're here, kind of what you want to know, and we can talk specifics and details from there. So if you're new here, I give away free calls. If you join today, you can get a link for the free calls, and I like to call them clarity calls. So it's 30 minutes and we get you really clarity and connection to your business, and it's free. And I think it's just a great way to kind of connect, and thank you for being here. So pop in and say hello. Got my notes pulled up. I'm going to get Facebook pulled up so I can see comments. Don't see the comments yet, or I don't see my video yet, but give me a second. Here we go. Okay. Yay. If you're here, say hello. We are up and running. Hey, Sarah. Yay. Thank you for being here. I think this is really fun because I do metrics all the time. It's just like how my brain thinks. And I know a lot of business owners are thinking about metrics with, oh, did I not plug in my microphone? Sorry. You plug that in. That'll help with, people think of metrics in terms of like their email list and, kind of Instagram and how many followers they have and all that sort of thing. So we can really measure anything in our business, but the main thing is measuring what is important to us. So we will get started. And I still have like allergies, or I don't know, something with my throat. So pardon me. So metrics are really measuring your company's success. And so there are a million different kinds, but I like to think of financial ones, which typically focus on revenue and profit margins. There are customer focused, which focus, mainly on customer efficiency, satisfaction, and retention, and then process focused. So those really measure operational performance. So those are the three kinds I usually think about, talk about, and work on with my clients. And then you can always use industry standards to compare to. There's lots of good reporting out there where you can get your NAICS code and then plug it into a website, and they'll kind of tell you what other businesses in your area and your kind of revenue level, are doing with certain KPIs. So I think that is helpful to measure to your industry, but what I really like to do with my clients is really measure against themselves and do it over a long period of time. I think that really gives you the best information. Where we live in Charleston is so different than, somewhere in Arkansas. And so, I think they're both considered in the Southeast. So you can kind of sort by the Southeast, but, it's really, with most of the businesses I work with, it's really hard to find someone that's exactly like their business. And so that's why I really like to measure it against yourself over a long period of time. So the objective of a good KPI or metric is just having a clear objective and getting clear information. So it's just a way to measure performance over time and help make good decisions. So when we think about worthwhile metrics, it should really reflect the goals of your business. So, like I said, there's like tons of them out there. There's some for industry specific stuff, but really think about in your business what your goals are. And then I like to talk to business owners about getting curious in their business. So, if you think you're doing something in your business and it's going well, like, let's get curious and think about like, well, is it going as well as we thought? Have we looked at this in a while? Let's kind of revisit why we're doing this process, because it can really give us some good information. So thinking about picking KPIs that really reflect your goals. So if customer satisfaction is one of your main goals in your business, then you should definitely have some customer related KPIs. If, having a high profit margin is really important, then you should have more like financial ones and kind of process focused KPI. So think about the goals in your business. I'm doing the strategic planning party this week, so you can sign up. This is a great plug for that. And you really think about the goals of your business and why you're in business. But having those goals defined really helps you figure out where to start with your KPIs and what's important to you. Even if you are in the same industry with other business owners that you know, you may have completely different goals than they do. You may want to pay yourself as much as possible now, whereas they want to pay themselves less and like invest more back in the business to grow. You know, just looking at kind of what your goals are is just a great starting place. So another good, worthwhile piece of a KPI is that it should be critical to the success of your business. So that means, if most of your clients are referral clients, then having a ton of Instagram followers like may not really matter. Like, not to say that that's not a good thing to increase, but if all of your work is like word of mouth, you have high ticket stuff, really focusing on customer satisfaction and customer education about maybe a referral program or something like that is better than, just having a big email list. So that's why I say that really, a worthwhile KPI really is critical to the success of your business. If you are very reliant on employees and certain people working in your business, and you could not do your job without it, you couldn't do it without them there's no way you can jump in and take over what they do, then, being focused on their well-being and their happiness and, being employee focused is a big thing. So that could be kind of a KPI to focus on, because having happy employees is critical to the success of your business. So, that kind of goes along with your goals, but, making sure that it's critical to the success of your business is a worthwhile KPI. And then also, this goes without saying, but I'm going to say it, they should be measurable, because we are measuring these every month, month over month, quarter over quarter, comparing it to last year. It needs to be easily measurable. It's kind of a given, but let's just say it so that we make sure that we understand that there is a way to measure it. And sometimes we have to kind of get creative with that, especially if it's like customer satisfaction, that can be a hard thing to get, especially when people are happy. I know it's easier to get customer information when they're not happy, they will let you know, but usually when customers are happy, sometimes they don't feel the need to let us know. So we might have to get creative with figuring out ways to get that information and following up, or kind of goodies or whatever will go with it. But figuring out how you can measure it is really important. And then the last thing is the KPI or the metric will point to activities that you may need to alter if you get off track. So it's great to pick something like, if you pick your email list and you're not growing, it doesn't really tell you what to do if you're off track. But if you know that your revenue is going up, but your cost of goods sold is going up more than your revenue, then that's a good thing to tell you that your profit margin is going down, even though you have more revenue. And so that's something that is telling you that you're off track, and you can kind of dig into why that is happening and be a detective and kind of figure out how to hopefully get that number so that the costs are only going up as much as the revenue is. So I'll pause for a second. Let me know if you have any questions. If you're here, let me know. Sarah, you have anything? I don't know if you have any questions about this. It can be very like high level, but I think it's fun to talk specifics. Like I said, I could talk about this all day because there is just so much that could go with it. But really, we talked about what makes the metric worthwhile. And in order for it to be a success, I don't want people to be like, oh, I'm going to track this, this, and this. Like, I think people should pick 5 to 7 at the very most. So even 5 and tracking that month after month is kind of a lot. If you pick more than that, it just gets a little bit daunting every month, and you might kind of just give up. And so, making sure that you pick things that are easy to gather and you don't pick too many, and then you do that on a regular basis. So, a metric helping you is if you can get the information quickly and easily. So if it's super difficult to gather it, if there's not kind of a system and process to get that information, definitely think about getting the system in place so that you can get that information. And it should also get to the right person. So if it's someone is in charge of gathering that information, but it doesn't get on the business owner's desk for weeks, then that's not helpful. So making sure that there's a process to get the information to the right person quickly. And then also, as a result, you might need to do some communication to your team members. And so that kind of is, if you are really focused on customer satisfaction, communicating that to the team and letting them know, like, okay, we're really focused on customer satisfaction. We are measuring these things. We are following up with customers in this way. This is kind of where we're starting. And so we want to see this customer satisfaction, go from an average of 3 to an average of 5 stars, whatever it is. Communicate that to your team. And then you may need to do some training around that. So it might not be enough to be like, hey, we want customers to be satisfied. It might be like, here's what it looks like to go above and beyond to help these customers. So think of it in terms of not just you as the business owner, kind of in your own bubble, tracking these things. Really think about getting everyone involved. Obviously, if it's things like, gross profit or something you don't want everyone to know, that's fine. But if it does involve team or just employees, make sure that they are on board and that they know kind of what's going on and what we're looking for. So today we'll kind of talk about 5 basic ones that I like, and I'll just kind of review them quickly, and then we'll go through them. So these are the ones that I think can kind of apply to a lot of businesses that if you're here today, you could probably take them and use them. And the first one is revenue growth. That's so easy to track. It's just a good number to see. And a lot of businesses, your revenue growth doesn't just go like straight up. A lot of businesses, it goes like this, or you've got a busy season and a slow season. So whatever it is, make sure that you're not just like going straight up and thinking that you're failing because your revenue doesn't go straight up. That's kind of how it is with most businesses. And, it's just something to normalize and wrap your head around. And I'm going to double check her comments because I think my thing froze. So if you hear and you wrote a comment and I didn't see it, I'm sorry. My Facebook is frozen, but, I think revenue projections are good. And obviously we look at them, but pretty much no business or, not any business just has that continual increase in revenue growth. And I know that's kind of frustrating, but it's also just a good thing, to just realize that it's normal and to kind of make it normalized in your head. And then it will also just help you prepare. So if you know that these are our months that we are low in cash, being able to prepare for that. If you have big expenses coming out, you can save through the year, especially like tax planning. I was talking to a client yesterday and she has a certain percent she has to save every month. And it works out to about $8,000. And during her slow season, that's a lot. So we're talking about how can we, push some of that to the busy season with cash. So a little off topic there, but I do think watching revenue growth is just a really fun thing to do, especially if you've been in business for a while. You can kind of look back on how you've grown over the years, and it's just, you forget how far you've come. So revenue growth is easy. You can kind of just, in QuickBooks, you can pull it up and compare it to previous months. I like to also track stuff in Excel spreadsheets and just kind of plug in some numbers. And it just, you can look at that percentage change from month to month, and revenue growth is just an easy one. Another one is revenue per client. So whether your products or services, this is just a really easy one. You take your revenue for the month and then divide it by the number of clients or customers you have. So that kind of gives you an average, revenue per client, and just a good way to see, kind of what each person brings in. And obviously, it varies because it's not like, well, depending on what you do, if you offer one service and you charge every client the same thing, then that one is easy. But when you do the average, you don't see, the ebbs and flows. And so the next one we're going to talk about profit margin. is kind of one of my other favorites. Revenue per client is good. It's an easy number, and you can kind of, pull that into a spreadsheet and see hopefully that increase. I also kind of like to do average ticket item if you are, in products and you sell products, just kind of getting your average ticket item. You can either pull it directly from your point of sale, or you can, calculate it yourself. Like we had this amount of revenue, this many clients, divide it, and then that gives you the average ticket. And then you can try to work to increase it. So like, say you want to increase it like, I don't know, 50 cents per average ticket price. That could really bring you in like a couple $1,000s per month, depending on how many customers you have. So, using that number to kind of think about how you can improve revenue and bring that up. But the next one is the profit margin, which I love. That is revenue minus cost of goods sold. So let me know if you have any questions, but cost of goods sold is anything that goes into making the product. So if you are, product based, it's pretty simple. It's like, okay, I bought this bottle of wine for $6. I'm going to sell it for 12. That's kind of your profit margin, is that difference. If you are services, then, if you have subcontractors or a team that help you directly, then that would be part of your cost of goods sold. If it's just you, then, thinking about anything in your business that is a direct cost to that service and putting that as cost of goods sold. I know if you're service oriented and you don't have a team, there's not a lot that might go in that cost of goods sold. Like if you travel for a certain client or something, then that would definitely go there. But otherwise, like the software and your computer and everything else you use, that's kind of just overhead indirect costs. So you might have really low cost of goods sold. So, for service-based, that one is a little bit different. But I think profit margin is just so overlooked and it's not thought about enough. So I was working with a client on this yesterday, kind of mentioned it before. The revenue went up like 60% from previous year, Q1, but her COGS went up like 80 something percent. So there was like a 17% difference that like her cost of goods sold went up more than her revenue. And so we really did some digging. We kind of pulled reports by vendors, and for each vendor, we looked at how much that cost went up from the previous year and even got like a percentage for that so that we could see like, okay, we paid this supplier like $10,000 more than we did last year. Like what's going on? Is it just inflation? We looked up inflation, that's like 8.5%. So it was definitely more than inflation. So it's just something that she's going, we're going to keep an eye on it. She's going to kind of talk to her team and talk to the people ordering and kind of get information about like, why has it gone up so much? Do we have a lot of waste? Are we ordering more than we need? And, supplies are kind of sitting there, or is it getting lost or damaged, or, the freezer breaks and we lose a bunch of stuff, kind of figuring out like what's going on there so that we want that profit margin percent to go up with the revenue. So I think profit margin is just a really fun, easy one to calculate. And that one is just so specific for you. I mean, you can compare it to industry averages, but I think, paying attention to your data and your numbers is just so important. The next one is kind of the client retention rate and return. So if you work with clients for a long time, kind of keeping an eye on how long your average engagement is good. And then, if it's just kind of a one-time thing, looking at how often people come back. So usually, if you're like a coffee shop or wine store or ice cream or whatever, having some way in your point of sale to track that and figure out who's returning, maybe doing like rewards program or, the card where they get a punch every time they come in, kind of being able to track things like that is just really good if you're, most of us are focused on clients, focused on customers. So knowing how often they come back, because that's one of the main reasons or the main things of growing your business is, getting more people in the door, and the more returning customers you have, it actually works out that you're spending less. If you have a returning customer, I don't remember what the number is, but you get to keep more of that profit from them because you're not having to like go out and spend on advertising and all this stuff to get new people to come in. So returning customers are great for business because you really get to keep more of that profit. And then the last one is, one that we all love, customer satisfaction. So this one is just easy. I want to say it's easy just because it's simple to track doesn't mean it's easy to track. Because like we talked about, getting feedback from happy customers is just something that may not easily happen. They're happy, they see the review email and they just delete it because they're like, oh, it's good, it's fine, I don't have anything to say. So making sure that we really follow up and ask them. I know in my business, I started getting annual reviews from people, and it's so hard, which is great because I guess it means they're happy with it, but having to follow up like 2 or 3 times to just get feedback about how everything's going, what do they think about the monthly touch points and all this stuff. It's good that when people are happy, but it is kind of, you need to get that feedback, and it is very helpful. So figuring out ways that you can either get like someone on your team or a virtual assistant or someone like that, maybe helping with follow-up if you're service-based. If you're product-based, then just thinking of ways you can integrate it with your point of sale. I know Square and some other ones kind of send them like a follow-up and they can just easily rate it real quick. And then just giving them a thank you for the feedback, that makes a big difference and makes it worth their time. So in order to really have meaningful data, you really need to do it for like a long time frame and consistently, because that's going to give you the best information, especially if you're like us in Charleston and you have a busy season and a slow season. Really being able to see it over a long period of time, seeing the ebbs and flows, knowing what to expect is just really helpful. So doing metrics, doing KPIs really requires constant monitoring and close-up follow-up. And then if you get something that looks a little off track, I always like to be a detective and figure out, well, did something go wrong with the way it's measured and captured, or is this really just like a weird number that throws off, all of our average metrics? So, making sure that that what you're looking at is reliable and you can figure out, if something was wrong or not. And then, kind of one of the downfalls of KPIs and metrics is that sometimes if you're so focused on those and you're focused on certain numbers and achieving certain goals, then, employees or your team can be pushed too hard to reach for those KPIs. If they're just trying to be too efficient and they're, the customer connection is going down, but, the processes may be faster and more efficient, it's kind of like you don't want to, you're kind of messing yourself up over here just to get a better KPI over here. So, thinking about that, and maybe managers, if their commission or something is tied to KPIs, they might just be too focused on like productivity KPIs to really reach that goal. And like I said, kind of fall off on the customer satisfaction because they're so focused on productivity. So, the way we do these in my business with the clients I work with, I use some special reporting software. And so it connects to QuickBooks and we can pull some things. And then I also use spreadsheets. So I track it in a spreadsheet and then I can plug the numbers in reports just to see how it looks in a graph. But, having something simple like a spreadsheet is just a great start. And then just having it consistently every month and making sure that you're keeping it simple with 5, maybe 7 metrics, but really focus on a certain number. And then after a period of time, if you feel good about it, or you feel like, hey, this is easy, it's not a big deal to get this data anymore, then stack some other on top. Because, as your business changes, your goals change. And so you can kind of keep growing and adding what you need. So, oh, thank you, Sarah. I love all the examples, very insightful, and helps give an idea on how to start tracking to meet goals. So thank you. I appreciate you being here. But yeah, if you have questions after this, please let me know. I'm going to drop a link for the clarity calls so that you can schedule those if you need some help. These are just kind of fun calls that I think, will just help you get clarity and connection in your business. So that's one of the ways you can work with me. I also have 90-minute clarity and connection intensive. So it's a full hour and a half where we can look at your books, look at what's going on, and really get you set up to, kind of get where you want to go. And then I also have monthly stuff where we do, I call it the 6 months to peaceful and profitable business. So it's 6 months where we work together one-to-one, 3 meetings a month. We do the books. We're always talking numbers and strategy. So those are the ways to work with me. I really appreciate you being here. Any other questions, comments, let me know. And just looking at myself as it's summertime in Charleston, as we go through the summer and I do these, I'm just going to get sweatier and sweatier because taking the dog for walks in the middle of the day is just getting really hot. So just be forewarned with the sweat and the shine factor. But I appreciate you being here. I hope you get a lot out of these little Wednesday sessions, and let me know if you have comments or questions and anything you'd like to see in the future. So thank you so much and have an amazing day.